Hey guys, welcome back to Snowball Investing. This is going to be the December Freetrade and Vanguard portfolio update. It's been an insane couple of months, especially in this past month where my portfolio has been absolutely flying. If you haven't checked out these videos before, what I do is transparently walk you through my portfolio, all of my holdings, my recent history, transactions, and my thoughts on the market. And hopefully you'll get something out of it. I'm not a financial advisor. I'm just here to share my thoughts, share my lessons learned. So I have made mistakes in the past, and I'm sure I will in the future as well. Before I jump into my portfolio update, if you could please like and subscribe, as it really helps the channel grow, and I'm inching ever closer to 1,000 subscribers. Let's jump straight into the Freetrade ISA. So the value of this, it's at £236,363. And just in the past month, this portfolio is up by 17.28%, or the equivalent of £40,853. Just taking a look at the past year, the portfolio is up by 61%, or the equivalent of 144,438. And just looking at the maximum essentially time horizon of this, my portfolio is up by essentially 69%, or the equivalent of £163,035. Taking a quick look at the comparison with the FTSE All-World ETF. So this is a maximum time horizon from when I started investing in 29th of December 2021. So inching towards essentially 3 years now. My overall portfolio on a time-weighted rate of return is up 250%, so absolutely amazing, where the All-World ETF is up by 28.66. As we are inching towards the end of the year and about to start the new year, it's always good to look back and reflect on how I've been investing generally in the past couple of years, and I've been very fortunate and I've done very, very well. To be honest, a couple of stocks have been doing the hard lifting. So there is definitely a element of luck there, but I would say there is a lot of work that I've done, in terms of researching specific companies, the mentality of investing that has led me to where I am right now. I think my biggest takeaway in the past couple of years is having the right mentality for investing. I try my best to remove emotion from the performance of my portfolio. So, for example, when COVID hit and everything was absolutely crashing, stocks were going down day after day, week after week. That's the time I was buying extremely heavy. And that's obviously now paid dividends as the market has rebounded. And for example, now when there's a serious amount of enthusiasm in the market, I've pulled back my buying. Whether that's the right thing, only time will tell. Before we start looking at the individual position, it's probably a good place to take a step back and look at how my portfolio is structured. So at the minute, I'm sitting 84.8% in stocks, but I do have a large cash buffer. So that's 13.7%, or the equivalent of £32,410. Taking a look at the recent activity, I've not been buying really any stocks in the past couple of months, but in the past week I have been slightly adding to Alphabet, so added around 12 shares. And the reason for that is I think it's the most undervalued out of the large cap tech stocks. I think it's a very solid company, cash flow machine. I've already have a position in Alphabet, so I'm slightly increasing it, but generally speaking, I think the market is quite frothy at the minute. Companies are quite overvalued, in my opinion, so I am nibbling here and there, but I'm not buying huge amounts of stock at this minute. So I did receive a dividend from Microsoft of £2.51, quite small, but I'll take it. And I have sold some stock, so I sold 50 shares of Palantir for around £3,000. I got a dividend from Truist, that coming in at £36, which is quite nice. And I did sell some more stocks in November. So I sold around £1,700 worth of Rocket Lab and 150 shares of Palantir at a price of £7,632. Taking a look at the individual positions, let's start off with Palantir. And it's been pretty much the main reason why my portfolio is performing so well. So this position now sits at 2,260 shares at a value of £136,822, and this position is up 553%. And there's probably a couple of reasons why Palantir's been performing so well. I think the obvious one is anybody that mentions AI is going to get a premium, but I think Palantir's one true software AI play where they can actually demonstrate they're adding value to companies, and that's resulting in their numbers just being absolutely amazing, earning after earning after earning. And that in combination with, all the contracts they're getting every single week essentially, is demonstrating that there is a demand for Palantir. That the third is Trump is now in office, so I'm expecting government defense spending to go up, which will mean that's great news for Palantir. And, just so much great news. Palantir recently joined the NASDAQ 100 just yesterday. So everything seems to be going right for this company. The one big elephant in the room is the valuation. In my personal view, I think the valuation is quite stretched for this company. I think now there's a disconnect between the share price and how the company's performing, and they're performing great. But it's just shot up so much in the past couple of months that I just can't consider buying anymore. And in fact, as I just shown, I actually sold around £12,000 worth. The main reason I did that was it gives me some level of comfort. I mean, my initial investment into this company was £20,000, and I've just taken £12,000 off the table. So really, the investment I've got left in it is £8,000 from what I originally put in. So whether this goes, up to $100 or down to 40, it's taken even more emotion out of it for me because now I know I've only got £8,000 riding on this. And the other bit is all these numbers are great, but until you sell, you've actually made no profit. These are just your unrealized gains. So I've taken some off the table. I've got no regrets about it. If it continues going to 100, fantastic. And if it goes down to $30, $40, guess what? I'm going to be buying more. The other stock that has been performing absolutely amazing is Rocket Lab. That's up 507% with a value of £21,026. Obviously, the biggest regret with this is I just didn't buy more at lower prices, but hindsight's 2020, and it's another stock where I've taken some money off the table. I think my initial investment was something like £2,500. I've taken just over £1,000 off, so I've taken half my initial investment. So, again, it's taken the emotion out, but Palantir and Rocket Lab are two stocks I'm going to hold long term. I don't really see myself selling totally out of these positions for the next 10 plus so years. So, I'm less emotionally invested in the actual share price. And my main goal is to accumulate more at the right prices. The FTSE All-World Accumulating Fund, that's up a fairly decent 23% with a value of £15,241. And this position gives me just a touch of stability in the high volatile stocks I've got in this portfolio. And to be honest, for most people, you really should be investing in an index fund. It's probably the most reliable way to grow your wealth, not financial advice. But yeah, again, I've got a mixture of high risk, high volatile stocks, some index funds, and also some more safer plays I'll see later on in my investment portfolio list. SoFi sits at a value of £6,874 and is up 123%. It's a position I've got because this company just consistently beats numbers and has amazing management. And to be honest, if you bought anything in the past couple of months, it's just gone up regardless of what it is. So, obviously some of the performance here is due to the momentum of the market. But for this company, I think it's got fantastic fundamentals, and I can't wait to see where this kind of goes in the future. As I mentioned previously, Alphabet is one of those stocks I've been buying recently. The value now sits at £5,264. And it's one of those reliable companies that I know is going to continue to grow, whether it's through their GCP cloud platform, where a lot of the products they're producing are AI related and people are building AI systems on there. It's a massive, massive free cash flow machine. They're using a lot of that free cash flow to buy back shares. So, I know it's just going to be a reliable company that I can continue to invest in, very high quality. And I've got absolutely no concerns with adding at this price. PayPal is not doing too bad either. So that sits at a value of £4,014 is up 31%. Next up, we have the 2 dividend play. So Truist, that's at 50% of a value of 3,828. SL Green Realty, that again performs quite nicely and gives me a monthly dividend. So that's up 145% at a value of £3,417. Meta, so I think this was one of my best performers in this portfolio for quite a while. So the value of this is 3,230 and is up 215%. Again, I think a company I'm going to hold for a very long time. Be interesting to see what happens with the ban of TikTok, because if it does get banned, then I would expect a lot of that advertising to go to either Meta or Google. So no issues holding this company either. Another stock that has been mooning is Tesla, but I've got quite a small position at £2,617. I'm sure some of that is because Elon Musk is essentially best buddies with Trump. And lastly, Microsoft, a value of £1,590 and is up 64%. The last position is Everest still, but it's still a position I can't technically sell because of the issues with Russia. So it just sits there being red in my portfolio, which is a bit annoying because everything else is green. So that concludes the update of my ISA. In general, it's been a fantastic year, especially for myself. But as I mentioned throughout this video, I think we're getting to the richer side of the valuations for a lot of these companies. And I don't know how much more this can go up. And it absolutely could. We could see a rally for the first half of 2025. But just for my own sanity, I'm keeping a fairly decent cash position. So if there is a pullback, and generally things don't keep going up forever, so there will be a pullback eventually, I've got the capital to buy stocks that I think are undervalued, and continue buying good quality companies that I know I'm going to hold for a very, very long time. Next up, we have the general investment account with Freetrade. So the value of this is at £20,526, and in the past month it's up by 6.88% or £1,411. In the past year, the portfolio is up by 26%, or the equivalent of 5,515, and over a maximum time horizon, it's up by 40.56% or £8,326. I am going to whiz through these holdings because essentially I've not added anything to this account in probably about over a year. I mainly use this account to buy big tech stock during the massive crash because I knew they were seriously overvalued. I had maximized my ISA, but I do want to sell some of my GA position. I don't know if it's going to be the Freetrade one or the Vanguard one, just so I can capitalize on the capital gains allowance for this tax year, and then essentially move that money to either my ISA or my pension. So starting off with Meta, that's up 292%, and my biggest holding. Google, again, that was seriously undervalued as well, so that's up 66% at a value of £4,983. Amazon, wish I bought more of this, so the value of this is £3,192 and is up 112%. We have Enphase Energy, that's down 41%. That's partly because I don't think this new Trump administration is going to be pro-solar per se. But still holding it. No great issues with that. Microsoft, that's up 66%. JP Morgan doing quite well, although now these are quite small positions. So the value of JP Morgan is £635. Starbucks is up 21%. Intel is not so good, so that's down 42%, and Neo's down 72%. Luckily, these are quite small positions, so not such a large impact on my overall performance. So that concludes the GIA update. So now let's take a look at my Vanguard General Investment Account. The value of my Vanguard GIA is £18,300. It's only made up of the S&P 500. The actual unrealized gains at the minute is £5,421. There has been some recent news around Vanguard, and it's not had a great reception, obviously, but Vanguard are now introducing a £4 monthly fee, and this applies to any account that is a value of less than 32,000, which this account is. So it looks like I'll be paying £4 monthly. which is obviously not great. I've not decided what I want to do about that. I do need to sell some stocks to capitalize on the capital gains allowance, so I could pretty much sell this off, take a small hit on capital gains, and move my money elsewhere. But I haven't decided yet, and when I do make that change, I will let you guys know. So that concludes the December 2024 update, and I'll catch you guys in the next month's video.